welcome back. You're watching the 80 Money Show with me, Kavita Thapliyal. Now, there are a plethora of funds available in the market to invest your hard-earned money. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have on board Freoze Azeez, Deputy CEO, Anand Rathi Private Wealth. Freoze, good evening. Welcome to the show. And we have the first question ready for you, which is from Mr. D. Rathore. And he says that he wants to invest 10,000 rupees in SBI small cap. And he wants a corpus of almost 5 crores. Now, for this particular corpus, is this fund the right choice? And how many funds should one have for an investment of 10,000 per month?
Hi, Kavita. Good evening. I think, Mr. Rathore, your question of having one fund in the portfolio, I think one is definitely not enough. And how many are enough? Let me first build a logic of why it's important to have more funds. Is if you look at the 11 scheme model portfolio, which I generally recommend, or constituents of that, has had the best scheme deliver 17%, and the worst in the 11 has delivered 8% negative in the last 1 year, which is a difference of 25% in just 11 schemes. So if you look at total 570 open-ended equity schemes, if you leave passives also aside, the best and the worst will have 40% difference every year. So if you're going to take one scheme from a universe which is so diverse, then you have a large luck element of your incorrectness or correctness, and the swings you will have in terms of the extra return which you will generate, which is why you get into a mutual fund which is active, will be very, very high. So that's point one. So you should have more number of schemes and not have 1 or 2 or even 3 schemes. That's point one. Point two, I generally recommend somebody who's got 10,000 rupees a month can go up to 8 schemes because you still have 1,000, 1,200, 1,500 per month per scheme. And I think you should start with 8 schemes or 6 at least if you have 10,000. If you have 2,000 rupees, I would suggest 2 or 3 at best. But if your daughter's education is dependent on it, please have more schemes. But let me give you the base minimum LCM number of 5 schemes and recommend them to you. You can definitely have SBI small cap, which is again a good scheme. Apart from that, you can look at DSP equity opportunities, which is a large and mid cap, Kotak emerging equities, which are mid cap scheme, SBI Contra, which is a contrarian scheme, which takes those stocks which are not completely in flavor, but are value stocks and stuff in the current environment. HDFC Flexi Cap, Roshi Jain, who took over from Prashant Jain, managed a great portfolio and has delivered 17.5% over the last 1 year on a nifty performance of about 14.45%, which is a great alpha. ICICI Focused Equity, Mr. Naren, who the CIO personally looks at this portfolio. These are the 5 schemes, and you can definitely have SBI Small Cap. Vasan, who's the CIO, is one of the best person to lead a team of fund managers.
Ideally, how much should be the investment amount to have a corpus of 5 crores? Feroz?
Yes, Kavita, I don't know what kind of time frames he has mentioned.
Yeah, that detail is not there with us. Yeah, you're right.
Right. So if I look at getting to 5 crores is at 10,000 rupees, I think it will take him 20 to 23 years or a little thereabouts for him to get to that number, if 14% is the return assumed.
All right, we move on to our next question, which is from Mr. Prasad. Now, he says that his daughter is investing 10,000 per month in Axis Blue Chip Fund, and she wants to invest more whenever the market crashes. Is it a good strategy for long term?
See, there are 2 parts to it. One is having one fund is a very wrong strategy. And if that fund goes wrong, which is what has happened, SBI Axis Blue Chip fund has generated negative alpha of almost about 7-8% over the last 1 year on Nifty. If you're buying a large cap fund with this kind of swing from Nifty is not valid. If you look at the active portion of the portfolio vis-a-vis Nifty, it's not so high, but your underperformance has been stupendous. We gave an exit call to most of our Axis Blue Chip was a part of the model portfolio at Anand Rathi. June 13, 2021 is when we gave an exit, almost a year and a half back, and there has been 9-10% underperformance from that date of exit. So if you have only one scheme, it's not always a good idea. Have more number of schemes, especially when the amounts are 10,000 rupees. You can afford to have 5-7 schemes. That's one thing which you need to tell your daughter. The second thing which I think she needs to do is when the market crashes, putting lump sum money is not a bad idea, but always define what is the fall you want. Otherwise, on the day of fall, you never get the courage to put in the money. I met some HNI, he says, when the market fall, I'll put in money. But then if you say market falls, on the day when it falls 3%, people will tell you it will further fall and you will never take that action. So if you are going to be doing some small little peripheral timing, write down your rule so that you can follow the rule without judgment on that specific day, because market crashes does not give courage for people to invest unless you have put a rule to yourself.
All right, we move on to our next question, which is from Mr. Shankar Ji. He says that he's investing 35,000 SIP for daughter's higher education, and the funds selected are Nippon India Small Cap, SBI Small Cap, HDFC Mid Cap Opportunity, PGI Mid Cap Fund, and SBI Nifty Index Fund. And he wants you to review his portfolio and if his goals are aligned as per the portfolio.
Yes, I think Shankar's portfolio, Kavita, has 35,000. He investing in only one index fund and the rest of them being mid and small cap schemes, I think is a strategy which definitely has not worked last 1 year. And I don't think it's a great strategy to have one index fund and have two small cap and two mid cap schemes. These are goals which have to be achieved in life. So if you're going to have such important variables of goals, then diversification in the true sense needs to be done. Asset management company needs to be diversified. Capitalization has to be diversified. Geographies have to be diversified sometimes. And I don't think you've done that. So, Mr. Shankar, I personally insist you to have different categories of funds which have value. I personally don't believe in index funds. Index funds are for those people who don't know what they're doing. And they just want to be sitting back and relaxing and enjoying the index returns. Please add FlexiCap as a category, focused category, contra and large and mid-cap category. 4 different categories can come into your portfolio. Exit PGIM India mid-cap fund, exit SBI small cap, SBI index fund, Nifty index fund, and add these 4 is my recommendation, of course, for your consideration. After exit load periods have been relaxed on the installments you've already invested. HDFC FlexiCap, ICICI focused equity, DSP equity opportunities, and SBI contra. This will bring in some degree of diversification on the category and the asset management side, company side as well.
All right. We move on to our next question, which is from Diksha. And now, Diksha says that what is the best way to start investing in mutual funds for beginners? And she also wants you to suggest an SIP amount for a corpus of 1 crore in 10 years.
Yes, Diksha, if you have just 10 years at hand, then 1 crore will require a larger amount of SIP, as much as 39,000. I don't know whether it forms in the realm of your affordability today, but don't be disheartened if it doesn't. There's something called the step up SIP. Start wherever you can and step it up 20% every year, which I think is practically a possibility, because every year your salaries would go up as you progress in your professional life or your business life, whatever profession or business you do. So start with an SIP what you can and step it up over a period of yearly, or 20%, 25%, 30% if you can't afford 39,000. But the number is, if you're going to be earning 14% compounded for the next 10 years, to my mind, that's a fair expectation. 11, 12% from Nifty in a growing country like India should be possible. 2-3% alpha, if you are very vigilant on your schemes, is certainly possible and has happened at Anand Rathi for the last 9.5 years. We have generated 3.17% alpha per annum on Nifty with our active management of mutual fund portfolio. But there are 6 schemes which I'll recommend, which are intersecting with what you've heard for the previous caller, except one which I'll add, which is Aditya Birla Small and Mid Cap. And the other 5, we've already said it, but and they're flashing on your screen. Diksha, you can have a 6 fund portfolio for your 39,000, or use a step up as a strategy to bridge the gaps.
All right. A very common thing in most of the questions today that we've seen, Freoze, is that a lot of people are banking a lot on mid-cap and small-cap strategies. Now, when we talk about diversification, what would be an ideal portfolio look like? One mid-cap, small-cap, a large-cap? Is that how it goes?
See, Kavita, when it comes to Anand Rathi, which manages HNI money, we are a little more dynamic there. We like to decipher which is the segment of the market which will do well for that particular year and the subsequent 2 years in total, and then take a bet in terms of what should be the proportions. So it plays around in a smaller range, but at least have 50% in large cap, not as a category, but the stocks, the top 100 stocks should comprise of 50% of your portfolio in the 2023. I think mid cap is a little overvalued, but there's value in the small cap which has emerged. We also do a survey of the top 20, 15 fund managers to figure out what are they thinking in terms of market capitalization. So if I have to give you a synopsis of our thinking superimposed with some fund manager opinions and the valuations between these three segments, I think this year could definitely give you a pleasant surprise on the small cap side. Mid cap, which is nothing but the 101th to the 250th stock in the listed space as per market cap, which is what SEBI defines for mutual funds as the mid cap, is something which I'm going low on as a company. 50-55% in large cap, and small caps surprisingly will have at least a better value, and we pray that it unlocks the value over the next 1-2 years.
Also, a time to book profit if at all you are into one for a large cap fund and just maybe shift to an index large cap fund?
See, Kavita, to each is their own. In my opinion, if you have a great distributor, you will not miss an index fund in the next 5-10 years. In a country like ours, where the nominal GDP is going to grow at 10-12%, including inflation and the real GDP, for a fund manager to find a business, for all of the fund managers I have tried to track mathematically, it's not very difficult to find a business which can grow at 18-20%. So I don't go the index way because alphas are possible to be generated. In the large cap fund category, it's the least probability that you'll be able to find a fund which will generate alpha. So Kavita, there is merit in what you said, but I'll play the large cap as a story through the flexi cap and other categories, and shed the large cap category, which is what we did last year largely.
All right, so that will be all. Thank you so much, Feroze, for being on the show and helping our viewers plan their finances for their goals.